In the summer of 1996, the company that owned Spider-Man, the X-Men, and the Hulk filed for bankruptcy. This wasn't just a small subsidiary or a struggling division. The entire Marvel Entertainment Group, the heart of American comic book culture, walked into a Delaware courtroom and admitted it could not pay its bills. Marvel didn't fail because kids stopped reading. It failed because a group of financial predators had drained it from the inside and burdened it with debt that it never needed. To understand how the biggest brand in Hollywood nearly died, you have to look back at the moment it all fell apart. In the late 1980s, a new type of Wall Street raider discovered that comic book characters were undervalued assets. The idea was simple. A comic book might sell for $1, but the character on the cover, a piece of mythology that could be licensed, filmed, and sold, was worth much more. Ronald Perelman, known for buying companies and extracting cash from them, acquired Marvel in 1989. He didn't buy it because he loved the Fantastic Four. He bought it because he saw a treasure trove of intellectual property that could finance a debt-driven empire. This was the original mistake, a structural trap that would catch up to them 7 years later. The unseen players in this collapse were not comic book artists or editors. They were investment bankers and bond underwriters who convinced Marvel that its future royalties could be turned into junk bonds. Perelman's plan was a classic leveraged buyout disguised in spandex. He loaded Marvel with debt, used the company's cash flow to manage that debt, and then issued more bonds to acquire related businesses like trading card companies and sticker manufacturers. The comic book division stopped being a creative space. It turned into a cash cow, pumping money upward to pay down the debt that Perelman's holding company had loaded onto the corporate structure. By the early 1990s, Marvel was carrying over $700 million in debt, an overwhelming amount for a company with annual revenue far below that. Then came the speculative craze, a brief moment when the entire industry believed comic books were a real asset class. Collectors flooded specialty shops buying multiple copies of the same issue, convinced that the death of Iron Man or the launch of a new character would make them rich. Publishers responded by printing millions of variant covers, flooding the market with fake scarcity. The trading card business, which Perelman had aggressively expanded, became even more absurd. Boxes of cards were hoarded like gold, and their prices skyrocketed based on speculation. This was the typical pattern of a bubble, a genuine cultural product warped into a financial tool, with middlemen taking fees at every turn. The comic book companies, including Marvel, weren't selling stories anymore. They were selling the illusion of future value to a generation of speculators who believed that this time the market would never correct. Ultimately, in 1993, the speculators realized the truth. The market for collectible comics vanished, bringing down the trading card business along with it. Specialty shops, the backbone of the distribution network, began closing by the hundreds. Marvel's revenue dropped sharply, but the debt stayed. The interest payments didn't care about the death of Iron Man. They came due every quarter. Perelman tried to buy time by merging Marvel with Toy Biz, a toy company he also owned. The deal aimed to squeeze even more value from the comic book division, but it led to a conflict with shareholders, including the well-known investor Carl Icahn, who viewed the merger as a blatant attempt to shield Marvel's assets from creditors. The legal battle that followed wasn't about saving Spider-Man. It was about who would control the intellectual property when the debt ultimately consumed the company. The bankruptcy process was a cold, methodical restructuring that eliminated shareholders, reduced the debt, and allowed the intellectual property to emerge from the ruins under new management. A few years later, Marvel licensed Spider-Man to a small studio called Sony, leading to the birth of the modern superhero blockbuster. The characters that had been used as collateral in a leveraged buyout became the foundation of a multi-billion-dollar cinematic universe. The system simply found a new set of owners to profit from them. The next time a beloved brand collapses, remember that it was never the brand that was the issue. The real problem was the debt burdened onto it by men who didn't care about the story, only about the profit.